Joining us now, former U.S. Congresswoman and NBC political analyst Donna Edwards, Tax Foundation economist Erica York. We haven't even talked, Congresswoman, about, I mean, are we sure we're going to spend this effectively? Are there good things we can do where Americans will feel like, wow, that was a great idea, I'm getting my money's worth, or more boondoggles that we just shake our heads and go, God, the government is just so inefficient?
No, I think families are going to feel this. I mean, when you're talking about universal pre-kindergarten, everybody who's got a kindergartner out there is going to feel it. A child tax credit, people will know that in their pockets because they're spending so much money, up to 40% of their income being spent in child care costs. So I do think that there's going to be real value that Americans will see with this spending. And look, you know, Democrats committed that they were going to make sure that this was paid for. This tax that's being talked about now is because Senator Sinema wanted to abandon the increasing the corporate tax rate. But look, I think that the combination of this so-called wealth tax or billionaires tax on fewer than 1,000 people is going to go a long way to help paying for this over the 10-year lifespan. I think it's also going to be combined with a 15% minimum corporate tax and, you know, enforcement in the IRS. It's not clean because, you've got to manage it and figure out, sort of how to calculate the tax and who's paying it. But I think the IRS can do that for 1,000 people since it does it for a couple hundred million across the country every year.
Right. Erica, if you were listening to our previous conversation, Robert Frank made the point that this is something that's never been done before. It is a precedent-setting move, and I called it crossing the Rubicon. Do you think we should cross the Rubicon and start taxing things other than, well, we do with property tax already, but other than income?
I think lawmakers could have used this as an opportunity to replace some of the really economically harmful pay-fors that were included in the proposal with less economically harmful pay-fors, but instead they're going down a road of economically harmful and administratively complex. We haven't had a tax like this. Income is defined as when income is realized, not when it's unrealized. And that's not the norm internationally either. So there are a number of administratively complex questions that the IRS will have to work out. We don't know the exact details on the proposal yet. Hopefully we'll see those this week. But the IRS has already been pushed to the brink with administering these advanced child tax credit payments, administering just its regular duties as revenue collector. So it's questionable whether we should push this further in combination with increased enforcement as well.
Billionaires do have somewhat of an advantage in terms of avoiding being taxed on income if they don't take any income. Is there a way that where you're not completely going back on hundreds of years of property rights to do this? How would you do it? How would you get at some of that? And they have done well, obviously, over the past 5, 10, 15 years.
Yeah, well, what we see with other countries that have robust social safety nets is they don't fund those with higher taxes on corporations or higher taxes on just a handful of wealthy citizens. They use broad-based, flatter taxes like a value-added tax or like higher payroll taxes to fund these programs that are available broadly. So we should be taking a route like that. If we want to greatly enhance our social safety net, we should be funding it in a sustainable way, not through unsustainable taxes on a handful of wealthy citizens. And something like a consumption tax can be structured so it is progressively, so it can act as a one-time tax on existing wealth, but without the negative trade-offs of higher taxes on capital and the administrative complexities of completely and fundamentally changing what is counted as income.